From banking, we are now turning to an ecosystem that has been one of the biggest catalysts of India's financial transformation, which is Fintech. Now, India's Fintech journey has been defined by not just innovation, scale, but also the ability to solve for the needs of a very diverse market. And with AI opening up an entirely new frontier, the next generation of Fintech will have to find the right balance between innovation, responsibility, personalization, privacy, speed, and trust. To explore what the next phase could look like, may I invite Ranvir Singh from CNBC-TV18 to join us on stage to moderate our next conversation. And joining her on the panel are Anirban Mukherjee, CEO, PayU, Akash Sinha, co-founder and CEO, Cash Free Payments, Miten Sampath, interim CEO, Cred, Sohini Rajola, executive director, NPCI, and Ranvir Singh, chairman and CEO, Kissht. Over to you.
Thank you. Well, what can we say about India's fintech story that hasn't already been said? It's been one of the most extraordinary ones. And we built our digital payments for hundreds of millions of users. UPI is pretty much a global benchmark. Fintechs have moved far beyond payments as well. They're talking about lending, wealth, insurance, financial services, you name it, and giving banks a run for their money, if I may say so. But the big question, of course, now hinges around sustainability. Now, who pays for this huge infrastructure that has been built, that powers this kind of a growth? The government, of course, has opened the doors to MDR, which is a little fee that merchants will have to, start paying to ensure that this massive UPI ecosystem that we've built continues to live. So, we're here to talk about what that means, whether that makes the system sustainable, and what the next leg of opportunity for scaling fintechs would be. So, again, gentlemen, and Sohini, thank you so much for being with us here. And Sohini, since we're on the topic of UPI, and we recently just heard from the RBI Deputy Governor that it is very much in your hands, how the whole system gets shaped up, what the fee structure would look like. So just start by giving us a lay of the land. What kind of a fee would make the system sustainable? And, what happens to merchant adoption? Do you expect some resistance to begin with?
Thank you, Ritu. So, while I won't comment on exactly how this is going to shape up, because there is time and there's a process for that, but I think the important thing is to first take a look at how far we've reached, right? Like in July alone, there were about 24 billion, 23.66. Yeah. So we will not round that off since it's in billions. Transactions and nearly 30 lakh crores, again 29.8 lakh crores. Roughly 1 lakh crore is what is being transferred using UPI on a daily basis, right? We are at that scale, one would think that you actually just reach saturation, but it's not true. We have a really long way to go. Like UPI, though it seems ubiquitous to us sitting in this room, we're only about 240 odd daily active customers, 240 million, about 500 million monthly active customers. That is still a very, I would say, much lower than the number of people who have bank accounts, number of people who have access to internet, and number of people who have mobile phones. All the three things that are needed for a digital payment. In fact, I can tell you anecdotally, I have taken an auto in Mumbai where the driver said, I don't have a smartphone, I don't accept UPI, so give me cash. So there is a long way for us to go. There's a lot that
He didn't even use UPI Lite?
No, he didn't. He didn't. And I'm telling you, that's why there is a lot of work for us to be done. Because, when people say UPI penetration, it's very easy. And I think it's the lazy thing to do to say, let's look at tier 3 or, back of beyond or something. No, it's in cities. If you take the gender diversity there, you will find that there are more women who need to be on UPI. So there's a lot of work for us to do on getting the basics right, and then marry that with what is required in terms of dealing with the new cybersecurity, the new innovative use cases. We need to get to agentic. Like, there's that whole spectrum that needs to be covered.
That's
so
a very
there's a lot of
interesting
work.
insight that, even the urban metros are not saturated and there's more work to be done there. But for all of those that seem to have a bit of a resistance to the idea of a fee coming on to UPI, just give the audience a sense of what the cost of running an ecosystem that is supporting those kind of transactions is, and whether, let us assume that transactions above 2,000 only are charged this fee. Is that enough, being just 2 to 4%, I think, of overall transaction volumes? Is that enough to keep the system alive?
See, I think, again, it's important to frame this right, Ritu. This is, and this is a life cycle of the entire, where we have come to in terms of fintech and the digital transactions. There's a time period for everything. There was a time when you needed to get to, UPI is only about 10 years old. By the way, it's exactly 10 years old. So if you were in 2015, there was no UPI. And 2015 is not that long ago, right? So there's the scale that we have reached. The investments have not come from any single constituent or one part, right? Yeah. There's fintechs, there's banks, there's technology providers, there's obviously NPCI. The regulators played a big part. So there's this whole ecosystem, and the people and the merchants have trusted. Like the DG in his speech this morning, earlier in the start of this program, was talking about how the customer doesn't think about what all is happening when all of those digital payments are happening, right? The billions that are happening. So all of this has come together. It's not one individual. It's too simplistic to carve out to say, is this equal to the cost? There is this whole thing of saying, we've come this far, this is what has happened, now what does it take for us to go from
Well, Sohini, let's say the Payment Council of India puts the number at 20,000 crores a year. Do you have a number?
No, we do not have a number. I think there are different entities who can come up with different numbers.
And an MDR that would make it sustainable. Is it 30 basis points? Is it 50 basis points? What will help?
Ritu, I think we can, we can talk about this till the cows come home.
Oh, well.
So I think we will
It looks
move
like
on
we
from
shall, but Anirban, let me quickly come to you, since you look at this from a payments point of view as well. I mean, for someone like you, does this create an interesting paradox? You can simply choose to shift the customer away from UPI, or the merchant in this case, to maybe card, if there's a fee and there's some hesitation to it? Or do you think merchants would think of it as, the cost of doing business and move on?
Look, there is always an adoption curve. There's always a conversation to be had. But even if you take the largest of e-commerce merchants and we serve them, take a guess at what is cash on delivery today.
The bulk of your transactions? The bulk of the payments go into cash on delivery, yes. I know, but I don't know what the number is.
Yes, it's about 30%. In many cases, it's north of 30%. After all of our efforts, that costs a lot of money. In some cases, it costs a merchant 400 basis points, right? Because with COD comes higher returns, higher frauds, lots of things. So when you just think of even a large merchant who will end up, paying for this, there is benefit, first order direct benefit for them. And then there is massive second order benefits for the whole system, right? I think India is 30%, 35% digitized, much more to go, especially when you think of B2B payments. If you think of all kinds of payments, as Sohini said, we are year 10 of a very long journey. It's a very long test series. We are in innings 2, maybe, right? So from that perspective, some amount of, revenues in the system that helps make up for the charges, that helps make up for the costs, for the significant more investments, I think it goes around in everybody's case. And if the whole country is digitized, we'll actually grow much faster as an economy.
Well, Akash, do you have a number that you think would make it sustainable? Because you, again, interact with merchants on a daily basis. And also this interesting question that some people seem to be bringing up, because we're a Jigaru nation, right? So if you say 2,000 is the cap, will you split the bill into 1,999 and the rest to avoid it? I'm just saying there's a way around it. So what are you hearing from merchants on this?
See, we serve largely online merchants, right? And for them, I think it's difficult to do what you suggested. See, for online merchants, converting a customer to a purchase, it's a costly affair even today, right? So just adding cost from UPI is not going to change the math for them, right? And plus, they already factor in the cost of payment by cards in their business model even today. Right? I mean, they assume, a bunch of the customers will pay by card. So again, they're not changing the price basis the payment method, right? Which means they are ready to accept, the cost of payments through the payment methods like credit card, debit card. They're still priced much higher than what UPI is today, right? So for those merchants, again, I'm not trying to be, too opportunistic. For those merchants already factored in, right? I think for UPI, obviously, they pay lesser, but it's already factored in the business model. right? I don't think it will change a lot of behavior for them. Right?
Okay,
if you
that's
ask from their
encouraging to know if you think merchants will move on. Ranvir, what does it mean for a digital lender like you? Does it unintentionally tend to benefit you since it makes one form of payment, one form of collection a tad more expensive?
First of all, I should rather humbly admit, when already everybody else has spoken, there's only so much I can add intelligently. But given this lacuna, still let me attempt. See, I think it is making a huge difference. At the end of the day, we are a digital lending company, and so is many other people. The moment you have a form factor where you are easy to repay loan, not only easy to repay loan, but get into the UPI autopay kind of an arrangement, that makes a world of difference. So much so, not only true for me, but many other players, the difference between NASH and UPI autopay has, the swing of the pendulum has completely on the side of UPI autopay. So I think it's a very, very, important step from a repayment standpoint. I don't think the MDR coming in there is going to make any significant impact. I think the simple rules of lending, which is to always assess a high quality customers, differentiate between, rank order the risk, I think those will be far more overpowering considerations vis-a-vis this one.
All right, take that point. Mitheen, since you're the one perhaps on this panel that serves only the affluent customer, so the one that probably will be impacted more than the rest, what's your take on the whole thing?
I mean, I'll just, continue what Ranvir said. I think most of my co-panelists have made all the right points. I don't think there's any, I don't think the affluent customer or the customers that we serve are going to be very concerned about this. I think they're going to be generally happy that the UPI, as Sohini said, wherever they go, they want to pay in the most simple and low friction method. So if more and more transactions get digitized, that's always a good thing. And affluent users prefer that. They prefer swift, smooth, safe, and secure payments. So I think it's a good thing overall for the whole ecosystem.
Well, okay, that's about the MDR, but the fintech story is way larger than just some fees and UPI. So, Mitheen, let me ask you about this whole bunch of new products you're launching by the day. I mean, people keep questioning, what does cred really make money on? But give us a sense of how you're using artificial intelligence. I mean, for banks, it seems to be almost a checkbox exercise to begin with. It's the customer care that's being taken care of by agentic AI. What are you seeing at cred that is making the most amount of difference?
Thank you for that question, Ritu. So for us, I think there are three broad dimensions we're thinking about. First is internal productivity. I think the pace at which we are able to produce new features, new products, and put them out in front of our customers has rapidly increased. With the same size of engineering team, we're able to put stuff out in a much faster way. You're seeing that with stuff that we launched yesterday and even more. So that's a very big upside. And eventually, we think about that in a manner to say, how can we serve our customers faster? Can we solve more problems for them at lower costs? So that makes a huge difference. The second is all the usual stuff that you mentioned, which is, can we make a customer experience on support a lot more intuitive? A lot of times, the challenge is to try to get to what the customer is trying to tell you, right? And it takes a lot of conversation. And with AI, that's become much, much better. And I think the third is trying to experiment eventually with the user experience itself. And I think there are two areas where we are seeing this happen, which is, financial transactions in general are probably the most complex that a customer generally has to deal with. So the range of how they might think about the problem and how you might sort of interpret is very wide. So we are seeing a large impact on the way in which customers are interacting with their credit scores. And that's really changed in a very big way. And so on the credit product now, you can ask a wide range of queries related to your credit score. And we are seeing that both customer satisfaction on that understanding and the next steps around that are changing.
But would you be able to pin down a certain percentage or some sort of efficiency meter to say the customer conversion or the customer retention has improved thanks to what you're doing with AI?
Look, the CSAT for all of our customer support has shot up by sort of 15 to 20 basis points, 15-20%.
15 to 20% increase in customer...
CSAT, customer satisfaction on support has gone up by that much. The number of things we're able to do using AI, I think we're doing 3 to 4x than we were doing before.
All right, that's quite something. Ranvir, I wanted to ask you, has it come to a stage where you can completely trust AI to make the digital lending decision without any human involvement at this stage?
So first of all, I should say AI is making a huge impact. Needless to say, I may not be, sharing a state secret if I say that. I think the difference has to be drawn between in traditional lending. The key question was a deceptively simple one, which is whether the customer will repay or not. While with AI, you are able to ask much richer set of questions. These questions are, in what circumstances the customer is going to pay? What is, are you able to pick signals before something deteriorates? Are you able to see the pattern similar to this person, to the million other customers who have paid? Not only that, even to the extreme of saying what is going to be the probability of default tomorrow, as against, laying for many, many other things. So I think the vast potential of AI is just beginning to touch us. There's a big, impact it has to be created as we go along. But dare I say that one should not be suspicious of false precision which an AI can give. Because, billions of data used can produce nonsense in a very magnificent manner. So one should exercise that caution. But talking about is machine taking a decision and is AI helping, take that decision better? The answer is a resounding yes.
All right. Okay, but not completely without any kind of human intervention whatsoever.
I think industry has already moved. In phase one of fintech revolution, I would say people where the machine was taking a decision, no human intervention required. People like me, people like Cred, people like other, there is zilch intervention required. But I think, that revolution is complete. Nobody is going to get a medal today for doing an instant loan without, individual.
Well,
everybody has...
certainly none of the fintechs, because that's very much their bread and butter. But Anirban and Akash, this question to both of you. How the economics of your business are changing thanks to AI today? Akash, starting with you.
See, I think we are using AI in a more opportunistic way. Instead of, saving our cost, we're trying to find ways where we can deliver value to our merchants, See, there are two purposes we chase. One is how do we reduce their cost of doing business? Other is how do we help them grow faster or be enabler? And the second part, right, we still see a lot of younger business SMBs, right? They don't have ability to get into, multiple tasks. They only focus about very core tasks, right? As a payments provider, we believe there are a bunch of other activities which they can delegate to us. For example, right, there's one problem we are working is more about, people abandoning the cart. A lot of companies historically have hired people in the call center. They call the customer back. And they try to understand why did you fail, something went wrong with the payments. And we believe a lot of these works could be delegated to our platform, right? So we are coming with more like a agent, super agent setup, where you can create an agent for certain specific tasks. That way, SMB can do similar kind of activities which a very large enterprise can do, right? Like today, a large enterprise will have people, resources, processes, and they can do more tasks. SMBs cannot, right? They can only prioritize very code activities.
Yeah.
So we can bring, up to the curve, right? We can take away the jobs. Again, we are not putting people to do the jobs, right? And that's where the power of AI is real, right? It's helping you do more with a lesser resources, right? That's the true, we believe, is the outcome of using AI in any of the processes.
Anirban.
Akash said two things, both of that. Of course, more productivity and help SMBs more. I have two other things, right? I think AI will fundamentally reduce the cost of software dramatically, makes much more software available for the micro SMBs in a very meaningful manner, in ways that is unimaginable today, right? India is the land where supply always drives demand. And I think you'll actually see much more digitization and much more faster digitization of SMBs, but many more micro entrepreneurs coming in. Just any tool we release, any software we release, which is virtually free, I'm just amazed at the adoption in SMBs. The other thing that is happening is this intersection of payments and credit. Right? We have a credit company as well, and we are completely focused on embedded finance. And SMB, right? What you could do just with structured data, you could do much more with structured plus unstructured data at the intersection of payments. So payments leading to credit, UPI then driving digital credit into SMBs. I think that's also a very macro theme. Those are two additional things.
All right. Well, Sohini, I think the last time we spoke on this banking transformation panel, we spoke about what next from NPCI, and there were talks about, ULI, the Unified Lending Interface, credit on UPI. But since then, which has been a 2-3 year period, not much has picked up on both of those ends. If you could give us an update on what's happening, how soon do we see ULI? credit on UPI, what seems to be the friction, if any, and how quickly is it expected to grow?
So I'll talk about credit line on UPI, or credit on UPI more specifically, because that's the one we are driving. I think at NPCI, we thought this would pick up a lot faster than it has picked up. But I think from last year, I would say the volume that was being done on credit on UPI, so someone who gets credit, links their credit instrument, not just links their loan on UPI, and then uses it at a point of sale. What we were doing in a year last year, or what we did in the entire 25-26 financial year, now roughly half of that, or actually that same amount will be done in a month in the next 2-3 months, by the end of next quarter. But it's on such a small base. So just to put numbers in perspective, for example, for the entire last year, for all the people who linked a credit, either a loan or a OD or any other kind of instrument, and instead of using their bank account to pay on UPI, were using this linked loan account, the total amount was in the range of about 1,000 crores. Now we're doing 500 crores a month. It should actually be tens of thousands of crores a month, because I think that is really again, goes back to what we've been speaking about in this forum, to say, you have to be able to have people, one, offer credit based on the flow and the information and the rich data that is available. Secondly, when the customers are able to link this credit on UPI, then the lender gets better discoverability, better visibility of where the credit is being used, and through autopay that I think you mentioned was about better ability to, or lower the cost of recovery. The same thing for the customer, it is much easier because all the customers who are right now not using UPI may not be just because they do not know UPI, but maybe because they are waiting for the credit. It's not like they have the amount in their bank account to be able to then link it. And the interesting thing there is how both the government and the Reserve Bank has been helping with pushing that further. So many of the government schemes, like the Kisan credit card or the Mudra loan, etc., now are being linked. In fact, a large number of PSU banks are also now picking this up as saying this is one way to be able to get UPI and digitization faster across.
But what about ULI?
So ULI, I think, is something which is being driven by RBIH. So I don't have much context on ULI, so I'll not
but
be able to
let me
comment
ask
on
you
that.
another interesting development, if not slightly unrelated, is the entry of Apple Pay in India. The rumored entry of Apple Pay in India caused quite the buzz, but it seems that they're entering India without UPI. They're not going to be available because of some regulatory issue with NPCI yet. If you could give us an update on what really is happening there, because people would like to know, and what the entry of a player like UPI would mean for payments in India.
Yeah. So, we introduced BioAuth on UPI last year.
Okay.
And interestingly, just in the month of July, there were about more than 800 million transactions. Now, 800 million sounds a lot. It's only about 3.5% of the total UPI transactions. So but 800 million transactions, and I'd urge everybody, if you haven't yet done it, go and activate BioAuth on your UPI.
Biometric authorization.
It's
the favorite feature on the Cred UPI.
And by the way, it increases the approval rate by 2% on a very high approval rate already. I think it is amongst the instruments with the highest approval rate. So the transaction or the experience on UPI for all customers, regardless of whether you have an Apple phone or not, is actually, I would say, right up there. And it is accessible to everyone. It is interoperable. It is available at scale. So I think
so will we see Apple Pay on UPI perhaps sometime in the future as they enter?
So see, I think the key thing for us is to say the way we want to offer any product or any service, any feature is it has to be available to everybody. It has to be interoperable and it has to be at scale. At NPCI or the way UPI or our digital public infrastructure is built, we cannot go after anything that is creating walled gardens.
All right, message taken. But Miten, talking about these global players coming to India and that big investment from Meta, that seemed to be quite the watershed moment for Indian fintechs. And of course, an Indian founder, Cred's founder, going on to take that global role. What was the larger takeaway, you think, for the industry from there? A player like that coming in, putting in this kind of confidence capital, and India's fintech story getting recognized on a global scale.
So I think, Ritu, you answered your question. I think it's the fact that a large global company putting so much trust in an Indian fintech is obviously validation in us and our business model, but also the larger fintech opportunity in India and how fintech companies, all of us on this in the ecosystem, are making a large change and how that's happening. And I think as monetization accelerates, I think my sense is that you'll see a lot more capital coming into the fintech sector, which was not happening for the last little while. So I think that's a good validation for all of us.
But, beyond the validation, I mean, how did the whole thing transpire? Anything more you'd like to tell us about, how you at Cred perceived it and this big change coming in as well, with your founder moving on?
No, I think we're very excited about this because I think, ultimately we think fundamentally about what is the problem that we're solving for our customers. And I'll tell you something very fundamental. One of the core beliefs that we have at Cred is that your track record is an asset. And we believe that the most trustworthy and creditworthy customers in India have not been paid back for that. Right? If you think about one of the big impacts I think about from AI is that credit should be a lot more personalized, right? To the people who are paying their bills on time, they should be treated better and differently, and their cost should come down. And they are treated the same way as someone with a thin file, and that kind of doesn't make much sense. So I think this capital gives us a lot more sort of firepower to go do that. We're kind of excited from that lens.
Well, and we wait to see what you do from there. But I'm being told I have to wrap up here. So very quickly, closing comments from you, maybe perhaps in a line or so. Starting with you, Ranvir. What about the fintech industry do you think is most underrated? And what is the one trend that is most overhyped today?
I think the fintech's ability to follow a velocity, go after narrow segments with almost obsessiveness around, in a very granular manner, I think is very, very underrated, extremely underrated. I think slightly overrated, don't mind me saying that, is because the availability of capital, because at the end of the day, the capital is in a different pool. And we all know the pitfalls of, having large capital, but having a very mediocre underwriting can be, remarkably inefficient, while the reverse can also have a limited this thing.
Anirban.
I think the population scale platforms India FinTech has built, at the prices, at the costs at which we offer them, is just, I don't think anybody else in the world has done this.
So that's the most underrated. What is the most?
Yes.
Yeah, what's the most overrated trend?
Yeah, I think the flow of capital, right? It's just a very hyped up story.
Akash.
See, I think fintechs in India is still, I'd say, not that large. Right? Still nascent for the size of country we have, right? So we're still in the early days of fintech. There's no point saying there's saturation or overrated, right?
All right.
The more we should speak about fintech, it's better for the people and the country in general.
Well, I think we talked plenty about fintechs, but Mithun.
Look, I think just as we are asking that how many Indian banks are going to be in the top 10, we have to ask the same question, how many Indian fintechs are going to be in the top 10?
Yeah.
And I think we should aim for at least 3 or 4.
Well, that's, I'll leave the regulator to answer that last bit of it. What do you think?
The regulator is Reserve Bank of India. So I think the fact that we have all of these transactions and all of this information and the AI capability and the brilliant engineers and everybody, but we still have people who have to actually, go to informal markets, or you have these boards saying, convert credit card to cash, which you can find even in Mumbai. I think that is the opportunity. So whether you call it underrated or overrated, with all of this, what is the impact that we are creating with all the digitization and the digital payments?
Well, fair enough on that note, and hopefully see a fintech in the world's top 10 countries. Why just banks? On that optimistic note, ladies and gentlemen, thank you very much for joining us here. It's been a fantastic panel, and thank you all for listening in. Thank you.
Thank you, Ritu. Thank you to all our panelists. Can we have a photo op? Where is the camera person? Oh, there. All right, gentlemen, ladies. Thank you. Thank you so much. Yes, Ritu, you will be invited back on stage.